In the future, gold is more valuable than ever, and a new gold rush has begun. Miners are flocking to the gold fields, hoping to strike it rich. One mining company, however, is taking a different approach. They are reducing the bonuses they pay their miners by half every 4 years. This is to prevent a race to the bottom where miners would compete to extract as much gold as possible, driving down the price. The way Bitcoin works is a bit like the mining company in that story. Every 4 years, the amount of new Bitcoin that gets created gets cut way down, in half. This happens over and over again. But think about it. If you keep cutting something in half, eventually there's barely anything left. Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation. Here we break down complex financial concepts using a simple whiteboard format, making learning about investing accessible to everyone. In our upcoming video, we're diving into the Bitcoin halving event, what it is, and what to expect around 2024 and beyond. Alright, so what's this Bitcoin halving all about? Before we dive too deep, let's make sure we're on the same page about how Bitcoin works in general. First, you have to know that Bitcoin is a cryptocurrency. Second, there is a concept in Bitcoin called proof of work. Imagine there's a bunch of people solving puzzles to compete for rewards. Whoever solves the puzzle gets some Bitcoin and gets to add the next block to this giant public record called the blockchain. And lastly, just to be sure, Bitcoin launched back in 2009. Okay, now that we've covered the basics, let's dive into the main dish of today's video, the Bitcoin halving event. Every 4 years, the amount of BTC given to miners as reward is cut by half. Take a trip back in 2009, when Bitcoin was just starting out. Miners solving a block were rewarded with a whopping 50 Bitcoins. That's a pretty sweet incentive. This high reward actually lasted for a few years, all the way until 2012. Then, something interesting happened. The reward got cut in half, dropping to 25 Bitcoins per block. This halving continued again in 2016, bringing the reward down to 12.5 Bitcoins. Since 2020, miners have been earning 6.25 Bitcoins for their efforts. But guess what? The story doesn't end there. As you might have predicted, the next halving, expected in April 2024, will further reduce the reward to 3.125 Bitcoins per block. It's getting closer and closer. All right, let's unpack why halving is a thing. Think of any paper money you keep in your wallet. Governments, when they need a quick buck or want to hit some economic targets, can just, print more. Need more cash floating around? Just goes the money printer. See a bit too much cash? They ease up on the printing press next year. Now, as humans, we tend to be a bit spendthrift. Often more money gets created than might be necessary. This constant increase in the money supply has a consequence. Inflation. Inflation's a whole other beast we won't tackle here, but just know it slowly sucks the buying power out of your paper bills. Want to feel the rush of causing inflation? Click the like button and watch us become even more addicted to likes each time a new video come out. Back to the track, unlike the ever-expanding supply of traditional currency, Bitcoin operates with a predetermined ceiling. While new Bitcoins are released daily through mining, this process is programmed to slow down significantly every 4 years, ultimately reaching a finite limit of 21 million coins. This creates a scenario where inflation, though technically present due to the influx of new coins, becomes increasingly negligible as time progresses. In fact, Bitcoin's economic model leans towards eventual deflation. How? 2 factors contribute to this: accidental loss and the basic principles of supply and demand. Firstly, with human error inevitable, some Bitcoins will undoubtedly be sent to irretrievable wallets, effectively removing them from circulation. Secondly, as demand for the limited pool of Bitcoin stays constant or even rises, the scarcity caused by both mining slowdown and accidental loss should drive the price upwards. This interplay between a capped supply and potential demand increase paints a picture of a future where Bitcoin becomes deflationary, meaning its value steadily increases over time. While the concept of Bitcoin halving might sound straightforward, cutting miner rewards in half, the underlying mechanism is quite ingenious. Unlike traditional systems that rely on real-world time, Bitcoin employs a unique approach based on block numbers. We'll explore this fascinating concept in a moment. Imagine Bitcoin as a complex clock, but with a slight twist. It strives to maintain a consistent rhythm, generating a new block roughly every 10 minutes. This time frame ensures a predictable flow of new coins entering circulation. However, the equation gets interesting when new miners enter the scene. With more computing power thrown into the mix, solving the mathematical puzzles that secure new blocks could theoretically happen faster, say every 5 minutes. This is where Bitcoin's self-regulating mechanism, known as difficulty adjustment, comes into play. It acts like a vigilant guardian, ensuring the average block creation time remains around 10 minutes. If it detects a surge in mining power, the difficulty of the mathematical puzzles automatically increases. This essentially makes it harder for miners to find solutions, effectively maintaining the 10-minute target. Conversely, if mining power dips, the difficulty eases up to keep the block creation process moving at a steady pace. This adjustment happens like clockwork, every 2016 blocks, roughly 2 weeks. Bitcoin meticulously recalibrates the difficulty to guarantee that the average block is solved within that 10-minute time frame. It might seem intricate, but the key takeaway is that Bitcoin possesses an internal clock and a self-regulating difficulty mechanism. Now let's add the final piece to the puzzle, the halving event. Every 210,000 blocks, the reward for miners gets slashed in half. When we factor in the average block time of 10 minutes, this translates to a halving event occurring roughly every 4 years. This pre-programmed scarcity is a fundamental aspect of Bitcoin's design, aiming to control the overall supply and potentially influence its value over time. The upcoming Bitcoin halving in April 2024 is a significant event for both holders and miners. As a holder, you can sit tight and observe the market. Historically, halving events have correlated with price increases, but it's important to consider other factors like increased media attention surrounding Bitcoin. The restricted supply might not be the sole driver. For miners, however, the halving presents a more complex situation. The reduced block reward means your mining operations profitability needs careful evaluation. Smaller miners with less efficient setups will feel the pinch more acutely. Large players with economies of scale, like massive cooling facilities or their own solar power generation, will have a significant advantage. On the other hand, if a significant number of smaller miners shut down due to profitability concerns, the overall mining difficulty will decrease. This could make mining more profitable for those who remain, even with the halved reward. Ultimately, the impact of the halving will depend on various factors. Extensive research is crucial for both holders and miners. Always prioritize caution when making any investment decisions, especially in the ever-evolving cryptocurrency landscape. That brings us to a key question. What happens when the halvings continue and the block reward reaches zero? Eventually, mining Bitcoin might become unprofitable due to the low rewards. What then? It's uncertain, but that can be a topic for another video. Now it's your turn. What are your thoughts on the halving mechanism? Does it effectively control inflation? Is it fair to miners? Should the halving rate be adjusted? Share your thoughts in the comments below. Before we hit the road, we just wanted to say a huge thank you to all of viewers for watching our videos. Like always, we hope you enjoyed today's video, maybe even learned a thing or two. And most importantly, we can't wait to see you back for the next one.